energy is so tied right now to the overall health of the economy. It's really, the fear right now is that demand is going to fall off a cliff. We've seen insanely positive data points on the supply side, yet oil prices have slid from 55 to 42. So yesterday, see a rally in the market. I think it took oil up with it, and it was simple as that.
Do you think that the demand is out there? Because it seems like a lot of other data points. I mean, we can say that oil is a product, that the price is a product of supply and demand fundamentals. It's what's specifically going on with oil. But then you take aluminum. Aluminum's at 20-month lows. We've got nickel at 14-month lows. It seems like the rest of the commodity complex is actually confirming the move lower in oil being because of weakness in global demand.
Yeah, and listen, the supply, demand, just anything on the margin. If all of a sudden we have, we take it for granted that oil demand grows over 1 million barrels year over year, year after year. And if you throw a wrench in that, all of a sudden, all bets are off for oil prices. And, 45 will seem like a pretty nice, lofty target if we're going negative on oil demand next year. We've only had that actually happen 3 times in the last 30 years.
Right.
But it's nasty if it comes to that.
But, Brian, that's what made yesterday's snapback so interesting, because if it doesn't go negative, all of a sudden people say there could be shortages out there.
Yeah, but here's where everybody screwed up, and by everybody I mean me, because we didn't know this. The Treasury Department granted these waivers for 8 countries to buy Iranian oil. Mm-hmm. When the Iranian sanctions kicked in, everybody started saying, we need to ramp up, even the president, let's ramp up production because we're going to have 2.5 million barrels coming off the market. Well, really quietly, countries like South Korea, Japan, they went and said, listen, we need to buy Iranian oil. Grant us this waiver, because remember, Treasury controls the money flow. 8 waivers quietly granted. So the point is, there's a lot of Iranian oil that is being legally still sold.
Right.
I'm not sure anybody.
But is that enough to account for a 30 or 35% drop?
Yes, because the marginal barrel is worth 0. Right now, if you go up to Canada, you can pretty much get oil for free if you can get it out. Natural gas in parts of Texas is almost free. We've got a lot of oil. We've got a lot of gas. The problem is there's no way to get it out. So that marginal barrel has really collapsed the entire price point.
So, Mike Kelly, where are you finding values these days? I mean, theoretically, there should be plenty of them. I mean, what decline in the space?
These stocks have all gotten crushed. The one that I always come back to, especially trading below $90 a share right now, is Diamondback Energy. I mean, if oil goes to $15, these guys are the last E&P standing here. The low-cost producer ultimately wins in this sector.
Even if oil goes to 15, FANG is okay?
I said they're the last man standing. They're not going out of business. It's still getting crushed if we go to 15. Even I'm not that naive to think not. So, but there, I mean, the lowest cost provider, highest margin guy, Diamondback's there. Another company we love that's just gotten crushed is PDC Energy. This is a name that actually trades below its blowdown value right now. So fire everybody at the company, just let their wells pay out. We think that's worth $31. Stock's, I think, close to 29 right now. So we see that with a major catalyst coming in Q1 with